I hate paying taxes. Maybe you like paying taxes. I don't like paying taxes, and it's just one of those things you have to kind of suck it up and deal with it. I pay my taxes because I'm a good, law-abiding citizen. But if you were the owner of a large multi-million-dollar corporation, what would you pay to immediately save about $19 million on your taxes? Well, fortunately, I have an example here. If you were Warner Bros. Discovery, the answer is $90 million. The company didn't lose the nearly $90 million spent on the film Batgirl. They sacrificed it. The fact that the film cost $90 million is corroborated by reports from CNET and a bunch of different financial or outlets that we're going to cover here. But at the end of the day, the $90 million is just the tip of the iceberg. This one film was a proof of concept for a massive multi-billion-dollar financial strategy by Warner Bros. Discovery. We'll show you how the SEC filings prove this single cancellation was part of a planned corporate restructuring that swelled to almost $5.3 billion, billion with a B, in write-offs. This wasn't about movie quality, it's about the corporate balance sheet and what they're willing to sacrifice to zero it out. Now, why would Warner Bros. Discovery do this? Their official justification is that this was a strategic shift toward high-budget theatrical films and away from streaming-only projects. Batgirl was planned, designed, and was intended to be released only on streaming in HBO Max, which has now been rebranded to just HBO. They claimed they needed to prioritize quality as part of a 10-year plan for DC properties, and this is a direct statement from David Zaslav, who is the Warner Bros. Discovery CEO. This narrative is the classic sunk cost fallacy avoidance type of scenario. Most people think you have to release the film to try and make some of that money back, get whatever box office sales that you can get. But the financial reality is a lot more cynical and unfortunately complicated. So forget the PR spin. The real story is that the tax code is the mechanism that allowed a company to make money by destroying a finished product. The accounting twist that has changed everything about how Hollywood manages content starts right now. So to understand how Warner Bros. Discovery made this decision, we got to get into a little bit of the financial terms. I promise I'll make it quick. It's not going to be too painful. The first concept is the difference between something called amortization and impairment. Normally, Warner Bros. Discovery would amortize the $90 million cost, deducting small pieces of the film's 5 to 10 year commercial life. So in other words, they would say, well, I'm going to chunk up part of the cost. We're going to assume part of the cost this year, some of the cost next year, some of the cost the year after that. So they spread out the cost over a number of years. But by permanently scrapping the film, WB declared the asset worthless or completely impaired, which means there's no way they can make their money back. So they put this official brand on it that says this product is no good, we can't sell it. And this is more of a statement for the IRS and the federal government. This is the corporate equivalent of totaling a car for insurance. They get to deduct the entire $90 million cost immediately against their current year's taxable income. So from an accounting perspective, it's actually a pretty good deal. Before we get into some more of the dry financials, I have to ask you a little bit about the irony of the situation. This loss offsets the gains from genuinely successful films. Tax law experts confirm this was the easiest path forward. Just cancel Batgirl outright and you don't have to deal with any of the mess. So allowing Batgirl to be canceled offsets profits from hits like The Batman. So the question is this calculated financial destruction of art ethical? Should tax laws allow multi-billion-dollar companies to profit by withholding content from the public? And when you're spending millions upon millions of dollars to create essentially superhero movies, and I'm not saying that to be negative about it, but is it really just art, or is it more commercial than most people give it credit for? What do you think? Tell me in the comments below. All right, let's get back to some of the stats to understand how it is that this decision was made. According to tax law partner James M. Bandelblue, as quoted in Newsweek, by shelving the Batgirl film, this is what he's saying, Warner Brothers will be able to reduce the loss incurred against its net income from other movies, reducing their overall taxable income. So in other words, it saves them a bunch of money in taxes, even though they don't get the revenue from releasing the film. Now, if we look at corporate tax rates, you're going to be around somewhere around 21% as a standard for federal. The $90 million deduction translated to an estimated $18.9 million in immediate tax savings. So they tossed out $90 million in cost, but they got almost $19 million back in tax write-offs. Now, David Zaslav, who is the CEO, defended the move, stating, "We decided that we had to have courage. It was difficult and it was painful, but I think the right decision for the company, and it was necessary." And this is according to him during an interview with Variety. The courage wasn't to take a financial hit. It was the courage to avoid the future financial hit. They weren't confident that the film was going to do well from a revenue perspective in the future. By taking the step of canceling the film outright, they avoid tens of millions of dollars needed for global marketing, distribution costs, and any kind of residuals they would have to pay back to the creators, like the director and the actors. This decision was the calculated avoidance of the opportunity cost. So they not only got $19 million back in tax rebates, if you want to call it that, but they also avoided all the additional costs they would have had to incur to market, distribute, and pay the creators in residuals if the film continued on its path. But as you can imagine, not everybody was happy about it. The directors, Adil El Arbi and Bilal Fallah, hopefully I'm saying their names right, they were very shocked and surprised and even a bit saddened about this particular development, noting that the film was far from finished, but their work was blocked from getting it to where it could reach its full potential. According to the directors, this wasn't a bad script on a shelf. It was a film deep in post-production, starring Leslie Grace and a returning Michael Keaton as Batman. The sheer finality of the corporate decision, which basically cut them off at the knees, canceling the whole thing in mid-flight, as they describe it, is what made the story a global sensation. For a short period of time, the film was big news, even though, for all intents and purposes, no one will ever see it. But for the corporate overlords who owned this film and funded it and backed it, the true benefit wasn't just the tax deduction, it was the clean slate. By taking the immediate loss, they wiped away all future liabilities. There are no more residuals to the actors or the creators, the directors, producers, and what have you. There's no more marketing budget, no more potential brand devaluation if the film didn't do well, which could be the case depending on how well or not the script was written. But the other thing to look out for is this was just a beginning. The Batgirl scrap wasn't one domino in a line that cost Warner Brothers Discovery billions. We need to look at the total damage and what this means for the broader picture. All right, so we tend to think that these things happen in isolation, that you look at Batgirl or you look at Batman or you look at any of the other WBD films that have been released and you treat them individually. But it doesn't really work that way at a corporate level. The Batgirl maneuver, which is to cancel it outright for the sake of a tax deduction, wasn't a one-off. It was a pilot program for what we'll call a post-merger bloodbath. The film showed David Zaslav exactly how to weaponize the balance sheet, sacrifice content for the sake of the spreadsheet. The Warner Media Discovery merger created massive debt and a pretty urgent need to clean the books for investors. The merger required Warner Brothers Discovery to aggressively reduce assets and liabilities, which basically means cut costs, save money, and then only bet on winners. The strategy to declare assets impaired was the most effective way to consolidate losses quickly and present a financially healthy balance sheet to Wall Street. Batgirl was simply the most high-profile, easy-to-point-to example. In other words, it was just low-hanging fruit. They were pretty confident it wasn't going to do well. They weren't going to make a lot of money off of it, so use that as the test example, and for all intents and purposes, it paid off. Now, of course, there's going to be some consequence for that is not entirely positive for their balance sheet. Warner Bros. Discovery initially projected restructuring costs of $3.2 to $4.3 billion after they merged. They then raised that estimate, citing an increase in content impairment costs. Right? There's that word impairment again. When you have a product that you know is not going to sell, then you have to do something with that cost. According to a regulatory filing reported by Investopedia, the total anticipated restructuring cost was raised to as high as $5.3 billion. So they thought they were going to merge WB and Discovery, that they had some costs that come from mergers because of redundancies and what have you, and that's perfectly natural. They put in a plan to say we're going to cut costs, tighten the ship, get rid of redundancy, and then only make products that sell. But after a period of time, we're now seeing that they've raised that amount of what they will call restructuring costs to almost not quite double, but I would say 60% more than what they originally forecast. So they have a lot of cutting they got to get through. So the first solution to their particular predicament is they got to cut costs, and they got to cut them severely. Canceling films like The Batgirl is one quick and easy way to do that. It's only $90 million. It's a long way from $5.3 billion, but it's a step in the direction that's going to work for their spreadsheet. Now, the second path, which could be a solution for them if they stick to it, depending on whether or not they got bought up by Paramount, which is the looming threat that's happening right now, is they have to look at the creative fix. Beyond the money, there was the IP, Batgirl, and the Bat family as a larger entity. Legal experts speculated that part of the motivation was to maintain the brand and the integrity of the valuable Batman DC IP, avoiding the negative long-term impact of releasing a film to be of poor quality. In other words, they're saying if you put out a poor Batgirl film, that's going to tarnish the reputation and the brand of Batman, not as a character, but as a property that can be sold and marketed and leveraged. The potential damage of a poorly received streaming-only DC film could have cost the brand far more than $90 million over the next decade. So if you're getting Razzies and you're getting constantly hounded by critics like myself who say that film is terrible, well, that doesn't look good for the reputation of the brand, and it makes the prospect of selling DC or leveraging against DC for financial loans and assets harder. The loss of $90 million became a necessary investment in future goodwill for the IP. Now, this strategy directly contrasts with the success Warner Bros. Discovery saw when they did bet on quality. The money they saved by writing off Batgirl went into the same balance sheet that reported profits from high-quality, high-stakes theatrical releases. That makes it a pretty clear choice. Protect the Batman brand at all costs, even if it meant sacrificing a $90 million Batgirl film that was going to be received poorly and wouldn't make any money. Now, all these roads eventually lead to probably the hardest-hitting fact of all. The $90 million loss sounds massive, but the actual tax saving was only about $19 million, if you adjust for a 21% federal rate. The remaining $71 million was a real cash loss. The company consciously paid $71 million out of pocket just to clear the asset and avoid the low, uncertain return, the future marketing costs, and the threat to the IP. That's the definition of a calculated decision. They were willing to take the loss because they thought the long-term view was worth it. So it's not just about avoiding taxes, it's about a trade-off for long-term financial stability. Now, will it pay off? We'll find out. But for right now, Warner Bros. Discovery is willing to take that bet. If you're going to look at all the numbers and bring it all together, Batgirl wasn't a creative failure left on the cutting room floor. A lot of people are saying they were just canceled because they thought it was too terrible to release. There's some truth to that, but not completely. Or some pundits have stated, oh, well, they race swapped Batgirl and they have Middle Eastern directors, and maybe there's some kind of wokeness going on. That, from all accounts, has nothing to do with it at all. Batgirl was cut because it was a corporate sacrifice. A $90 million asset intentionally driven into the ground to achieve an immediate multi-billion-dollar financial goal of restructuring the balance sheet. It had nothing to do with quality. It had nothing to do with creativity. It had everything to do with just balancing the books. But the trade-off was an immediate tax advantage and avoidance of future operational costs in exchange for wiping the slate clean on a problematic DC asset. They looked at it. They said it's probably not going to do well, and they decided it's better to cut our losses than try to move forward. The story of Batgirl, the film, is the ultimate lesson in the new Hollywood economy. Art is always secondary to accounting, which makes sense because you're investing millions upon millions of dollars in these films. The creative talent who put their heart into this project are collateral damage in a financial game that's being played at the highest corporate levels. It's a sad ending for the film, but a textbook case study for corporate finance. So if you're going to work in big Hollywood, you just have to get used to they're going to be playing the numbers. It's not about the art, as some people like to think of it. It's about who's paying for it. So, if you want to understand the actual quality and direction Warner Bros. Discovery is prioritizing, I highly recommend checking out the new run of the Batman One Bad Day graphic novels. I think they give you a better insight into how that could be done, and done well. It shows the quality first, high-end strategy that the Warner Bros. Discovery is betting the future on. If you're interested in checking out those comics, I'll have a link down in the description. So hopefully you found this video helpful, or interesting at least. Gives you a look behind the curtain of what's going on with the companies that make these superhero films. And if you want to support this channel so we can keep making more videos like this for you, don't forget to hit the subscribe button, hit that bell for notification, and leave a comment below with what other peeks behind the curtain you'd be interested in learning more about. Now, go read comics, but read wisely. I'll see you next time for more comical opinions.